So, day before yesterday, one of my YouTube subscribers mentioned the topic of squat candle. What is a squat candle? How to interpret it? How to handle a squat candle? So, that is why I brought a couple of examples for you. I will show you a couple of squat candles inside the base, and I will help you understand which one is more dangerous and which one is less dangerous. A squat candle is dangerous because uh, it touches our yellow line, which is our buy point, and then it closes below the yellow line. That's a squat candle. So let's see what how it looks like on the chart. So this is a daily time frame chart of BDL, Bharat Dynamics. This is 2nd of July 2024. So the chart is more than 3 months old. Both the charts that I will show you will be more than 3 months old. So as per the SEBI regulations, we can discuss this chart. Have a look at this base. How many points are there in the base? Let me draw the base for you. This is point 1. Point 2 is this point 3. What's the high of this candle? 1650. The high of this is 1649. So this is point 3, point 4, point 5, and point 6. See, this is point 1, not this one, because this is point is higher than this point. Okay. And if I scroll back, you have to go back 1 year from this level, from this point, and see what's the highest point on the chart. So this one is the highest point on the chart. So there are 6 points in the base. You go from highest to lowest to highest to lowest to highest to lowest. That's how you draw the base. I will remove this. So point number 5 is our buy point. So which is 1649. So let me draw the line 1649. Yeah, 1649. And if you want to see the base, it should look like this. See nice green zone closings. See nice green zone closings. The horizontal line represents the green zone closing. Coming back to the candlestick chart. So the next day, you are expecting a breakout from the yellow line. And look what happens. That's a squat candle. Squat candle means the price opens here below the yellow line, touches the yellow line, tries to make an attempt to go up, and then comes down, closes below the yellow line. So here we look for two confirmations on the breakout day, volume confirmation and price confirmation. Volume confirmation means on this day, the volume should close above the blue line. How much above the blue line? Well, as per William O'Neill's book, it should be 50 to 100% above the blue line. Now he talks about weekly charts, but we can apply the same concept on the daily time frame chart. It should be at least 50 to 100% above the blue line. So if the blue is like 4 million, here it's 4 million. So 50% above 4 million is 4 million plus another 2 million. So it should be 6 million to 8 million, right? 50 to 100%. But the actual volume was less than 4 million. This was 2.61 million. So we don't get volume confirmation. Volume you check here, by the way. This is actual. The red color is actual. The blue color is average. The red could be green as well, depending on which candle you are. So you don't get volume confirmation. Since you don't get volume confirmation on the day of the breakout when the price touches the yellow line, since you're not getting volume confirmation, does it not make sense to reduce your position size by half? Because you want to come out of the base on high volume. That is what your expectation was. Since your expectation was not met, it makes sense to reduce your risk. How do you reduce risk? You reduce position size, or you can move your stop loss up, or you can do both. I personally prefer to reduce position size. Okay. Price confirmation. Do you get price confirmation? No. Did the price close above the yellow line? No. The price closed below the yellow line. No price confirmation. So let's say you have 100 shares. Out of 100, you sell 50 shares because you don't get volume confirmation. And you sell another 25 shares, which is 50% of the remaining 50 shares, because you don't get price confirmation. So you sell 50% because of volume confirmation failure. You sell another 50% of the remaining 50% because you don't get price confirmation. So out of 100, you have sold 75 shares. What have you done? You have significantly reduced your risk. You have reduced your risk by 75%. And is that a good thing? Yes. Now, what's the problem with selling 75% of your shares? Well, there is a problem. Well, if you notice, it was it was a low volume day, which means what? The institutions were not selling on that day. If institutions are not selling, it means that the selling came because of retail participants, correct? The retail participants sold to whom? To the institutions, which means institutions are still accumulating the stock. So you don't see any sign of institutional selling, and you are selling 75% of your shares. Is that fair? Now, the answer to that question is not easy to understand. Let me help you understand. Okay, of course, there is no institutional selling here. So, which means it doesn't make sense to sell so many shares that you have. The stock could still go up from there. Now, whether you should sell 50% or 75% of your position size depends on the character of the stock and the market conditions. For example, on this day, if the market condition is showing uptrend under pressure, well, in that case, you are right to sell a majority of your shares because the market could be coming under pressure. On the other hand, on that day, if you see the market is still in a confirmed uptrend as per Market Smith, it makes sense to stay. Another point is, let's say this base that you are looking at, this is like base 1, base 2. Well, in that case, you could give the stock some time. On the other hand, if this was base 4, base 5, would you give it that much time? Would you hang in there with the stock which doesn't give you price confirmation, volume confirmation, and still is trading at base number 4, base 5? It's too dangerous, right? Maybe the stock is very much extended. So you would look at the base count, you would look at the market conditions, plus you would look at the character of the stock. Is this a swing trade or is this a positional trade? Does the stock meet 7 out of 12 of your fundamental criteria? If that is the case, you could probably give the stock some more time. If it's a pure play classic swing trade, you might have to reduce your position size, right? So this is a low risk squat. After that, of course, the price went down. Let's move the price forward. See, the moment it breaks the 50-day simple moving average, the game is over. Okay, you don't have to wait till the price undercuts the low of the base. The moment it goes below 50 SMA, we as swing traders and positional traders have taken a vow that anything below 50-day simple moving average, we don't want to trade that, right? So obviously, this stock would have hit your stop loss. But this does not happen always. Just because there is a squat candle doesn't mean that the stock will always hit your stop loss. After a squat candle, stocks could continue to go up. I can show you examples of that. I don't have examples for this video, but I wanted to tell you that you don't have to be afraid of the squat candle. At the time when you get a squat candle, you decide what you want to do. Whether you want to sell 50%, whether you want to sell 75% or you might not want to sell anything at all. Another advanced topic I would like to mention here is, see, when you get this squat candle, sorry, whether you sell here or not depends on what has happened in your portfolio in your previous 3 to 5 trades before you took this trade. Now, this is an advanced discussion because if before taking this trade, if you took 3 to 5 trades in which you made good money, then instead of reducing your position size here, you could move your stop loss at point number 6, for example, to reduce your risk. Why do you want to reduce your position size? Because now you have money from your previous 3 to 5 trades to finance the risk on this trade, right? So why would you sell a large position size out of this just because you have a squat candle? That's one thing. Second thing, just before you entered on this day, you have taken 3 to 5 trades in which you have just broken even or maybe incurred a small loss. Now you don't have the ability or willingness to take additional risk in your portfolio. In that case, you might want to reduce 75% of your position size. Correct? So that is also one strategy that you can apply where your decision is conditional. These are conditional decisions, these are advanced decisions. It depends on what is happening in your portfolio, and accordingly, you are deciding to manage risk because you are using the money from your other trades to finance the risk of this trade. As I told you, this squat is a low risk squat because it comes on low volume. Price doesn't move much, just 1.18% below yesterday's close. Not a big deal. If the institutions were selling, the stock collapses like 3, 4, 5, 6% in a day. Sometimes it goes down 30% in a day. You don't see that here. Plus, the closing is inside the green zone. If the closing is inside the green zone, you are getting tight price action inside the green zone, which is a good sign, right? I always show the green zone closing like this. See how tight the green zone closings are. This is a good thing. Nice consolidation. Let me show you another chart. Now, if you have studied my material, you will understand why I would never take this trade. See, look at this base. If you are truly my student, you will understand why I would stay away from this base. See, 1, 2, 3, 4, 5. Fantastic. Point number 3 would become 306.10. That would be your buy point. However, if you notice, there is a falling window here. So the high of this candle is 305.90. The low of this candle is 306.80. So between 305.90 and 306.80, there is a gap. Okay, let us draw the gap with two blue lines. So 306.80. 306.80. It's called a window. Strictly, it's not called a gap. Then 305.90. You see that gap? Now you will see this. You see there is a gap there. So that comes with experience how to identify gap between high and low of this candle. Now that gap is very dangerous as per candlesticks. Why is this not adjusting? Okay, well, no problem. As per candlesticks terminology or candlesticks knowledge, a falling window becomes resistance, and now you are going straight into resistance. So if you, I can't show you charts which is uh, which is near latest 3 months, but you can expand this chart later and see what happens after the next day. So there is a squat candle the next day. Look at this. See, it hits the yellow line, comes back down, that too on high volume. So that's a dangerous candle. And if you continue to look what happens, if you continue the chart forward, which I cannot show you, the stock just collapses. Okay, it's a complete collapse. It never goes above this yellow line. Okay, so I wanted to show you this squat candle. So I have not drawn the yellow line, but it touches the yellow line and it comes down. Now notice that candle and notice the previous candle as well. Both the candles are called as weak closing candles. What is a weak closing candle? A weak closing candle means a candle that closes below the midpoint of the same candle. So you take the high and low of the candle, take the midpoint and check where is the closing relative to the midpoint. If it's below, it's weak closing. If it is above, it is strong closing. So this is a weak closing candle, right? Then this is a weak closing candle because the closing is below the midpoint of the high and low. Okay. So this is a weak closing candle and a red candle, which means the closing is below the opening. This is a weak closing candle. See where the closing is. It's near the low. It's not near the high. Weak closing candle because it closes below the midpoint of that candle and it is a green candle. So weak or strong closing does not depend upon the color of the candle. It depends on where the closing is relative to its own midpoint. Why do I say that this candle is a dangerous candle compared to the previous candle? It's because it comes on high volume. Right? If the volume was high, why is the price coming down? The price should be going up, right? That is one problem. Second problem, it fails to close the window. It means that the window has been able to assert itself as a resistance on the chart. Let me repeat that. The window has been able to assert itself as a resistance on the chart because in spite of high volume, the the supply that was coming was not being completely absorbed. Resistance means supply. The supply was not fully absorbed in spite of high volume coming in because of institutions. So there could still be some supply left there, which makes it a dangerous area. That's why this candle is more dangerous than the previous squat candle. That's why this candle was more disastrous. I will give you small exercise, homework. Go to the chart of Bamal Lorry, go to 12th of July candle and check after 12th of July what happens. Actually do this. When you look at historical charts, you will understand what the importance of what I'm saying. A lot of people ignore windows on their chart. This is a classic example of why you should avoid a base which has got windows. So I would have never bought this stock and I never bought this stock because there is a window. So if there is a window inside the base, which is not closed, I don't bother buying that stock. So here the question of selling half, selling three-fourth doesn't arise because I never ended up buying the stock. Now, if there was no window here, then what? Well, then you have volume confirmation, you don't have price confirmation. What you could do is probably sell half, reduce position size, move your stop loss little bit up, maybe the low of this candle, manage the position. There is no strict rule for stop loss, but just because you're not getting price confirmation, you could choose to manage your risk, reduce your position size, tighten up your stop loss, or do both. Right? It depends on you. How much risk are you willing to take on that stock, depending on market conditions, depending on base count, depending on the fundamental characteristics of the stock, depending on the nature of the base, how many green zone closings are there, is it a volatile base, things like that. Can you do that? Of course you can do that because now you're my student and you have done a lot of hard work understanding how to mark a base, how to mark the points inside the base, what to look for, how to do liquidity, comparative, technical, fundamental, and market analysis, and then take a decision accordingly. Right? I hope this video has been helpful. Manage the squat candle. All you have to do is reduce the position size. Plus, if you have made some money in your recent 3-4 trades, you don't even need to do anything at the squat candle. The stock could continue to go up after the squat candle. But if you see a specific situation like this where the squat candle confirms the window as a resistance, then you need to be extra careful. So you need to learn chart reading properly. Okay. Thank you so much.